Top 5 riskiest stocks I personally hold. That's what we're about to get into here today, folks. Okay, I'm about to run you through my 5 riskiest stocks, why these are my riskiest stocks. I thought this would be a very valuable video here today, running through the risk factors of these stocks. And, obviously, whenever you're going to buy a stock, like so many people get caught up into the reward potential, and that's great, right? But I thought this would be just a great reminder of the risk you take, obviously, when you go into making a position in a stock. And I thought I would make this video, and I might make another video later this week. Let me know if you guys would be interested in this video or not. But I was thinking about making another video, my top 5 least risky stocks, or my top 5 safest stocks that I personally hold. So if you're interested in me making a video like that later this week, let me know in the comment section. I can certainly make one of those. I thought that might be intriguing as well, okay? I think it's very important everybody understands math. Okay, none of the people understand how math works in regards to investing, and it's a crying shame. Okay, when you go into a stock, and there's always a level of risk you have to take whenever you're buying a stock. I don't care what stock you buy, you are taking a risk. You are buying Apple stock, you're taking a risk. You're buying Microsoft stock, like these are seen as like the safest stocks, right? Usually in the market. Even those stocks are still a risk, right? You buy the biggest bank out there, JP Morgan, you're still taking a risk. I personally own JP Morgan stock, by the way. You put money in an index fund, you're taking a risk. Everything, when it's an investment, it involves risk, and it's important we understand that risk, right? Now, the great thing is when it comes to individual stock picking, and the most you can ever lose on a stock is 100%, right? But the most you can make on a stock is infinite. You can make 500%, 300%, 1,000%, 2,000%, right? And, if we look at the public count over time, for instance, right? And I remember I sold most of my Tesla shares over time. This is all I hold in Tesla. Like, there's a reason I call Tesla, this house, I call it the house that Tesla built with the 20-foot ceilings that makes an 85-inch TV look like it's a little Cracker Jack box TV over there. People always dog on my TV. That's 85 inches. You don't want a 20-foot ceiling? That's what it looks like, okay, folks? That's what an 85-inch TV. It looks like a little iPad up there. That's just the way it is, okay? But Tesla definitely changed my life. Like, I still probably wish I did hold all the shares I used to hold, but I held so many shares. Like, people have no clue how much money that stock really made me, right? Elf Beauty, another great example. I used to hold like 10,000 shares of Elf Beauty, right? This one certainly was a game changer for me. Not as much of a life changer as Tesla, but here's the deal. $7,200 worth of these shares, and those shares are now worth $133,000, right? So sometimes it can go really good, and sometimes it can go really bad, right? The Chef is a great example of, I didn't lose 100% in that stock, but I lost pretty dang close. It was 90-something%, right? It was a absolutely brutal loss. And so when you're finding companies, right? And remember, when I was buying Tesla back in the day, it was a very risky stock. It had a pretty bad balance sheet. For my standards, it had a bad balance sheet. There was a lot of people thought they could go bankrupt. There was a lot of thought that Elon Musk wouldn't be able to pull it off. And, I assessed the risk and I took a level of risk, right? Same exact thing with Elf. I saw a company there that was very damaged. It was a very heavily beaten down company. And I thought, based upon what I was seeing out there in the marketplace, that I believed they were going to turn around. And certainly they did. And we're sitting on, ridiculous gains. And imagine all the profits I took from Alpha over time. Like, it's absolutely astronomical, right? But the one thing you got to understand when you're buying any stock that is more of a risky stock, right? You got to ask, is the business model there? But also, are you going to put too much money into it? Because what happens to some folks is they think they found the next Elf. They think they found the next Tesla. And what happens is they put too much money into a stock, right? And that's obviously can lead to a pretty bad situation, okay? All right, so let's talk about my top 5 riskiest stocks I personally hold. My 5th riskiest stock I hold is Fubo. Fubo is my 5th riskiest stock. Obviously, it's had a tremendous past 6 months. Stock's up 133% in the past 6 months. It's doing amazing right here recently. It seems like it's turned a corner, but still comes with a lot of risk, okay? Here's the deal. Fubo obviously pitches it as, hey, we're making great progress toward our 2025 profitability goals. That's great, They raised their forecast. As of last quarter, they reduced their net loss by $41 million. Record ARPU in North America. That's great. They're making a lot of progress, but at the end of the day, here's the numbers, okay? Their net loss from continuing operations last quarter was $54 million. Now, they should likely get that under control more and more over the future quarters, but it's not guaranteed. It's still a $54 million net loss from continuing operations, right? Adjusted EBITDA was negative $30 million, and free cash flow was negative $75 million in this latest quarter, okay? So the bottom line is, Fubo's got a lot of work still to do. Have they made a lot of progress? Absolutely. Do they still have a lot of progress to make? Absolutely, okay? Because the bottom line is, look at this, okay? So as of the end of last quarter, they had around $300 million in cash, cash equivalents, and restricted cash, okay? Which is a pretty good sum of money, but it's not if you're losing these sorts of dollar amounts, right? And so at the end of the day, it's very important Fubo continues to cut down on these losses massively. We need to see in 2024 small losses. I mean, very small losses. We need to see quarters where they only lose $10 million on the bottom line, $20 million, $15 million. We need to see those type of quarters. If we're seeing those type of quarters in 2024, I can tell you then we're looking really freaking good with this one. In 2025, we can start talking about flipping, the ultimate flipping to profitability, right? And so that'd be a great scenario, but at the end of the day, it's still very risky because, man, the company's still losing a whole lot of money. Now, how do they get there? Here's the deal, okay? Subscribers. They need to continue to attract a ton of subscribers. Based upon Google Trends data, they are attracting ridiculous amounts of subscribers right now, okay? We'll see what they put up for this quarter. They probably won't announce the numbers for this quarter until November, unless they pre-announce because something's so shocking in there. But as long as they don't pre-announce, we'll hear likely in November. My guess is we're going to hear some pretty insane subscriber numbers, and numbers much higher than even the company was anticipating, okay? We need folks that sign up for Fubo to sign up for more expensive plans, and then we need the ads business to kick in a major way. Ads business has been, not really growing the way it should be growing. They need to get that obviously taken care of over this next few quarters and get that really, that business should be outstripping the growth rate of the total company by quite a margin. So if the company in general is growing revenues at 25%, the ads business should be growing 30, 35, 40% with how much catch up they have to do in regards to that. Okay, so a lot of work to do in regards to that, and that's how they get to profitability. If you look at their plans, here's the deal, okay? This is where they really start to make money, when they can throw people over to these more expensive plans, right? People like myself that are signed up for the $100 a month plan, right? Because I like to have all the different channels, and especially for college football, I'm a huge college football fan. They put so many games on so many different channels. I need like the ultimate plan, right? So this is what it's about for Fubo. It's about just attracting customers and then getting them to do add-ons, getting them to more expensive plans over time, and obviously taking things from there. So overall, Fubo's showing promise. It's certainly showing that it could become much less of a risky stock in 2024 and 2025, but it's not there yet, right? And that's why I put it as my number 5 riskiest stock I personally hold. So, yeah, that's Fubo. Now, Morgan Stanley's base case for Tesla stock is $313. They have a bull case of $400. Remember, this is for the next 12 months. And they have that was base case price is $400. Oh my gosh, their base case is $400. I thought that was our bull case. And they have a bull case price target for the next 12 months of $550 for Tesla, which is, about a double up from here. Wow. Okay. What a move. Now, for all of us that are down the Tesla rabbit hole, we all know that Tesla's the leading player, in our opinions, right, in the self-driving movement. And we are of the belief, all of us Tesla bulls that have gone down the rabbit hole, that Tesla's going to win robotaxi, that they are going to be the first to scale that out in a significant way. Whether that's next year or the year after, like at some point it's coming. We do know that. It's just a question of what year. And people have been trying to predict this for a long time. It's a very hard thing to predict in terms of when robotaxi will hit. But it does look like Tesla should be the leader in that market. And so it is a little dangerous to start pricing in anything in regards to that because you're not getting anything material for numbers yet from that, right? You can say, well, if somebody, pays $12K or whatever it is for the upgraded, obviously, Tesla self-driving package, you could say that's revenue coming in. But I would say we're at the small potato days of Tesla generating any revenue from self-driving. I think the big numbers are down the road when Tesla has a fleet of 10 million, 20 million, if not 30 million cars around the world out there that are being used, and they have an option that, in my opinion, should be $99 a month. And we'll see what they do long term there, but I think it should be $99 a month, and you pay for that subscription. And I think it would do absolutely amazing, right? So we'll see what happens there, but here's the other part. that I don't think a lot of other folks are factoring in. This is very, very important in regards to this whole Tesla situation, okay? And this is even bigger numbers. If Tesla's really going to be the winner in this market, which they have a great possibility of being, right? Guess what they're going to be able to do? They're going to be able to license that technology to all the other auto manufacturers if they choose to do so. No different than their signed contracts with all these other big auto manufacturers to allow them to use this Tesla supercharging network, right? Tesla's an amazing company, got an amazing workforce, and they put in the money and resources prior to these things becoming a big thing. And then other guys realize, crap, we kind of need what they got. And so do keep in mind, that's a huge potential for Tesla over time as well. From the other, which, I mean, then you were talking about, do they have a 50% market share of self-driving over time, or 60% or 70%? I think that's the big question, okay? So good old Tesla, awesome day there, okay?